We're seeing sell what you gotta, not what you wanna, and that's really affecting. It's typically you've seen this happen in the past when beta goes down to this velocity, you sell what you have to have. So that really started this weekend. Bitcoin broke below 60,000. It hovered there on Saturday and then broke through there on Sunday. So it was your indication. We'll start with the world's most significant leading indicator, and there's a lot of people who speculate in it. So that was like people had to sell that because they need to raise capital. You're seeing it in gold that really started, similar beginning of 2008 when we had the financial crisis. The significance of things like gold and copper going down is they're perfect goddess sellers, but gold will probably do better. The thing is, managed money net position speculators are way long gold for a reason, because it's a bull market. So they're liquidating some of that, but I think it's more likely to cover. And the difference then is crude oil. Crude oil's hanging in there. It's only down 1%. On a day like today, we'd typically be down more than the S&P 500, but we know there's geopolitical tensions, escalating. And a lot of the futures positions were way sold out about a month ago. So crude oil is not way overweight long like gold is. So that's where you've seen some of the greater, I think, pressure on gold, at least for today. But in the long term, as this resolves itself, we see that if beta is clearly making a little bit of a high and volatility is making a bit of a bottom, gold will be one of the primary beneficiaries.
And looking over at the crude oil market, WTI for those U.S. futures falling to around $73 a barrel. As far as what could be coming ahead here when you're talking about looking at the commodities space, what do you think this tells us more kind of broadly about the economy and the potential direction here for the U.S. stock market?
Well, it's deflationary forces. And I'm glad you went there, Jess, because I've been writing about this for a little too long, but particularly this year, commodities basically predicted this. With gold going up and all commodities going down. The Bloomberg Commodity Index on a one-year basis is down 6%, and the S&P 500 on a one-year basis is up about 21%. That's 1 year. That's signs of deflationary forces. And I think what's happening is those autocorrelation forces in commodities, they go down because they go up, are trickling down to other assets. So I don't see this as something as a one-off. It looks like it's just getting started. And then you tilt over. Why? Well, here's one good indication. The 10-year note yield in China is 2.15%. That's compared to 3.79 in the U.S. So China's heading towards a pretty severe deflationary recession if you watch their bond yields. And I think that's what's happening. And it's happening globally. So commodities have basically been predicting this. I think we're just seeing a little bit of trickle down from the stock market that's way elevated. Now, I'll end with this. The Bloomberg, the 200-day moving average on WTI crude oil is about $78 a barrel. And markets, that's tilted lower. We're right now about 73. The 200-day moving average on the S&P 500 is 5,000. And the S&P 5 index is about 5,200. We're just potentially going to revert there. And commodities were kind of a good indicator for that. And Bitcoin was one of the quickest indicators, I think, for what's happening.